Welcome to the 2024 Economic Depression and Preparation channel. Thank you for joining me once again on this Super Tuesday, January 23rd, 2024. Thank you for your support on this channel. Preach to me. Please be sure to subscribe to this channel for the latest interpretation of financial news as it becomes available in the mainstream. Today we're going to be talking about three indicators. First, we're going to be talking about the inflation blow as it continues to slowly rise, not as fast as before, and that's good news, but it continues to rise. We're also going to be talking about the Federal Reserve Bank, should they resist the temptation to raise interest rates or lower interest rates. And also we're going to be talking about how other people feel like there's going to be no collapse with the markets and how everything is going to be healthy and growing in this economy. So let's get right into it, ladies and gentlemen. Right here today, we're going to be talking about first, no economic collapse. Quoting to CNBC.com, a top city strategist says the healthy economic growth is coming. So he believes there's going to be a boom in this economy, not just the U.S. economy, but in Europe and Asia and the central banks, and all of this is going to be a rosy picture. Investors will be closely watching Friday's personal consumption expenditure inflation figure, and as well as other things as well. So he says that the global economy does not need an economic collapse to rein in inflation. Well, okay, that may be true or may not be true. But what we do know is that when you have a heavy debt load and when you also have a American public who's end up spending a lot more based on credit than actual income increases, and those increases are outpacing wage growth, then that leads to a recession. And that may not be a full-blown collapse, but that's something that we have to consider. That's going to be a belt tightening is in check for not only the American and European economy, but for the whole worldwide structure from China all the way across the United States. It's just that we're going to be one of the last to experience that because of how big our economy is, the recession, and i.e. the recession. So we have avoided the recession as a result of a great labor market, or a labor market that's still creating jobs, albeit at a slower pace. We only added 180 to 190,000 jobs in December, and in January. So we're slowing down right now. So that leads others to believe, according to MarketWatch.com, that should the Fed resist the temptation to lower interest rates too soon. Now, remember, they were saying that the markets pundits were saying that we're going to get a rate cut in March. Now they pushed it back to July or June for that first rate cut. Many believe now that the central bank and Federal Reserve Jerome Powell is going to leave rates unchanged through July or June now. So what do you think about that? Do you think that they're going to be cutting rates as soon as the first meeting happens this year in March? Or are they going to be waiting down the line to cut these interest rates, to get more money? Another thing I want to ask you guys is, do you believe, ladies and gentlemen, that we're going to see another stimulus check before the elections in November? Whoever wins, regardless of who wins, do you think that we're going to see a stimulus check for Americans before the election or after the election, before we get into next year? Yes or no, or it depends. Let me know about that. I'm very curious to see if we're going to get more helicopter money, or is that just totally off the table now that things have changed in a lot of these markets. So now the leading economic indicators have indicated bad times, good times. Economic indicators are down in December but slightly improved. You see how they spin it? U.S. News and World Report, they spin it 6 out of 10 components of a key gauge from the conference board improved last month. So you can see that they're trying to show you that manufacturing of electric buses here in Minnesota and other things are improving here. But the word on the street is basically that inflation is going to continue to rise, and that means that banks are going to be tightening lending standards on a lot of Americans, not just the middle class, but on all of Americans. And they're going to be tightening lending standards and loan standards as well, and that's going to be concerning. And this is what's going to be happening here. Once the credit dries up, the limits dries up, consumer credit, commercial credit, business credit, okay, once that dries up, then most people are going to realize, hey, we are actually in a recession. But right now, things have not been, they've been papering over, and credit is still, for the most part, largely flowing, albeit at a slower pace, just like the inflation is rising at a slower pace, ladies and gentlemen. But once that happens, then you're going to see a lot of people, going back to the basics, getting back to getting food, water, security, shelter, okay, getting close to God, seeing the spiritual change, dynamic change. You're going to see more people leaving the cities, the urban core areas of these bigger cities, and moving back into the exurbs, back into the rural areas, and they're going to be commuting, 1-2 hours or more. And carpooling is going to come back as well, and not just because of the increase in gas prices that could be coming as a result of this blockage in the Suez Canal and other places, but you're going to see more and more of that. So continue to prepare, it may not be a full-on economic collapse, it may be a slowdown, a recession, but either way, we could be experiencing things that can happen even in the natural world and nature. There's talk about a coronal mass injection, a CME today and tomorrow, a solar storm that could affect communications and other things. So be very mindful of what's going on out there in your world, and just prepare as best you can. You cannot be prepared for every scenario. I see these preppers and they always talk about being, but you cannot be prepared for every possible scenario, but you can tailor and individualize and stay as best prepared as you can. Having something is better than having nothing in most cases. Okay, so thank you for joining me for this edition. I'll talk to you very soon later on this week as we get more reports coming out on Thursday and Friday about this economy in the U.S. and abroad. Take care. God bless.